Hello, and welcome to Virtual Investor Conferences. My name is John Viglotti, and on behalf of OTC Markets, we're very pleased you joined us for our next presentation from North Bay Resources. Please note you can submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Jared Laserson. He is the Chief Executive Officer of North Bay Resources, which trades on OTC markets under the symbol NBRI. Welcome, Jared.
Thank you, John. Okay, let's get into it here. So North Bay Resources, the company's been around quite a while in the mining space. I took over as CEO a little more than 6 months ago. Since that time, we've been very aggressive on acquisitions. The cornerstone acquisition was in April. We acquired the Bishop Gold Mill in Bishop, California. That's a 100-ton per day gold processing mill, including gravity and flotation. And we are ramping that up as we speak. I'll get back to that in a second. At the high level, strategically, North Bay is focused on small high-grade deposits, very small footprint. So for perspective, 100 tons per day compared with a larger mine, Major, Teck, Newmont, Kinross, can be upwards of 50,000 tons per day. So what we'll process in a year is less than what they'll process in a day, just for perspective. How we make this up is great. So we've focused on acquiring or joint venturing high-grade gold deposits. The Fran gold deposit we just began shipping from. Here's a management slide. Let me just quickly give an overview of my history. I've been in the public markets for a while. I'm from Vancouver. I've grown up in mining 20 plus years. I took my first company public in 2014. That started with a market cap of $1 million and rose to a $200 million market cap with significant capital raises along the way. That was primarily focused in direct lithium extraction. In 2018, I accepted on behalf of that company, Standard & Poor's Leadership in Mining Award, specifically for direct lithium extraction. So I have some experience in the business, primarily in exploration and technology, but this company is really about production, cash flow, and producing ounces of gold. Recent milestones, I'll just go through here. So there's been some additional milestones in the last week or so, but we began final permitting of one of our projects in Sierra County, fairly close to Inyo County or next to Inyo County, where the mill is. So we've begun all preparations for significant bulk sample of 500 tons at the Mount Vernon mine. We initiated shipments, as I mentioned, from Fran Gold earlier this month, and I'll talk about that in a second. What initiated those shipments is the next item in terms of news flow, is that there were stockpiles from previous testing, test mining almost a decade ago. We had not focused on those stockpiles, but those stockpiles have run consistently north of an ounce, up to almost 2.5 ounces. So with approximately 5,000 tons ready to go, stockpiled, we initiated shipments. No time like the present, obviously with the price of gold and the mill coming online. We thought instead of waiting for what would happen in Sierra County, we just went ahead and initiated from our Canadian mine. And again, I'll talk about Fran in a sec. Again, some just additional information in terms of news flow, a joint venture of the Tabor mine, and consistent work at the Mount Vernon mine. And again, I'll talk about those in a second. The Bishop Gold Mill is the cornerstone asset. So Bishop is 100 tons per day, and it is fully permitted, tailings facility, and so on. There's some details here. Location, again, located in Bishop, California, quite close to Nevada, and again, contiguous with Sierra County. So within the operating plan, basically the mill can produce a minimum really of 100 tons per day. This just lays out some details of the operating plan. It is a standard type mill, the key piece being, of course, having both gravity and flotation. So whether we're dealing with a placer type ore that easily separates with free gold, or a sulfide ore that requires flotation, we're set up to address multiple feed sources. Sorry, here's just a little bit of the waste management unit. I think everybody probably knows to get a mill permitted in California is 90% environmental. They're certainly happy to have us producing and operating, but environmental guidelines are stringent. We don't mind adhering to them. The permitting has already been done, filed, and approved. So we're in good shape in that way. It creates a significant barrier to entry to anybody else. And this is one of the only mills that's been permitted in California in the last 20 years, and really was the main reason behind the acquisition is that the permitting was in place. Having a variable of permitting is quite risky. Not necessarily that it won't get done, but can be quite time consuming. So again, the value in the mill is obviously plant and equipment, but really having the environmental and water permits and so on in place. Flow chart, I don't know how you can see it. I'll just run through it briefly. Basically, there's primary crushing, secondary crushing. That then goes to the gravity table. So any free gold, silver, platinum will come out on the gravity table. That then moves to a flotation circuit, which is, again, for sulfide ore. That produces a concentrate, and then any remaining metals, minerals, then goes through a secondary concentration, is washed to remove the flotation agents, runs over a gravity table again. So really 3 phases of extraction. So we should see reasonably high recovery on this. Just an overview of the site plan. Equipment, I won't get into all the details. I kind of covered in the flow sheet there, but jaw crusher, ball mill, gravity table, flotation cells, and then secondary, what we call scavenger recovery of concentrate post-flotation. Just some metrics here, and I would mention forward-looking statements that are covered off under US and Canadian securities laws. So we're not actually producing these numbers right now, but these are our standing projections on a $2,500 price of gold. So even though the ore is grading north of an ounce, I just prefer to be conservative on this, and our kind of standing projection is the middle column. So at a half ounce, $2,500 per ounce gold, acquisition cost, which is basically our mining cost, transportation cost, processing cost, and then contingency based on 85% recovery. Again, I think that's fair. I'm not particularly concerned about significantly less than that. We may get a little bit more. I don't think we'll get more than 90%. And then there's just some metrics on gold, leading to gross revenue on an annualized basis of 36 million at 100 tons per day under these metrics, cost of goods, and then net revenue. And the reason we're saying net revenue instead of net profit is Fran Gold is under a joint venture. The Bishop Mill is majority owned by North Bay, but there is a private interest in that as well. The Mount Vernon mine is 100% controlled by North Bay. So depending on the source, North Bay will see anywhere from 50 to 75% of the profit. We basically split it between the mine and the mill, North Bay owning majority interest in the mill, and 50% on Fran Gold joint venture, for example, puts us at just north of 50% of the profit. And then on Mount Vernon, for example, would be north of 75% of the profit. So that should be noted. That all that is not take home for North Bay, but pretty solid numbers. Our goal really is also to be a holder of gold, silver and platinum, but primarily gold. So we will sell to the refinery in Reno what we need to cover costs, but we will also continue to hold gold in the vault. So that's just a strategic move, is to not monetize all gold, to be both a producer and a owner, a holder of gold. Like I mentioned, Fran Gold Project, we just started shipping from. There's a picture of the super sacks. So we loaded into 1 ton super sacks and shipped a full tractor trailer load, which is 44,000 pounds, 22 tons. That's at the mill right now. And we started running ore through the primary crusher successfully as of yesterday. We're now basically aligning and just making sure the ball mill can run continuously. That's happened today. I just talked to the guys, so everything's moving ahead with the ball mill. Then that'll allow us to run over the gravity table. We should see some recovery there. Our process engineers will be on site later this week to optimize the flotation. There's multiple flotation agents, but we have a pretty good idea of what to use. And again, that'll be optimized over the next few days or a week or so. Mount Vernon Gold Mine in Sierra County. This mine is located next to the richest mine in North America, the Ruby Mine. They have produced the highest grade gold ever produced in North America. This is on the same channel as the Ruby Mine. This is a virgin mine. There's only been some very small scale mining done. I think because Ruby Mine was right next door, nobody bothered to ever get to it. So we see this as a very interesting target. There's full tunnel, air, and water in the mine. All the infrastructure is in place. It's fully permitted. We just filed our operating permit with federal authorities. That's just a sign off where basically we say, okay, this is exactly how we're going to operate. And we expect the green light within the next few weeks. Our miners have been on site and everybody's ready to go. And that would initially be a 500-ton bulk sample. We'll run it through the mill and then we'll crank up to match up with the mill. So probably ideally north of 100 tons per day out of the mine. We have very experienced miners. They have worked traditionally at underground mines in Nevada. So we're in very good shape in terms of the mining team, and the final mine engineering for the mill, for the mine, should be completed within a matter of days for that initial bulk sample. We'll then use that to then figure out a much larger mining plan. Like I said, we're targeting 100 tons per day. So between Mount Vernon and Fran, we know we're good to go. Mount Vernon, still step by step, but previous assays have been between 1 and 4 ounces. So mainly what we're looking at is dilution. Recovery shouldn't be an issue. There were some gravity tests done on this ore, and the overwhelming majority of it came out in gravity. It also resulted in discovery of platinum. So it looks like we're good at 1 ounce or better per ton gold, and potentially a ½ ounce of platinum. That's what we've seen in the recovery, and we continue to work this through. My strategy has really been not spending a lot of time on exploration in these already developed advanced projects. I can mention with Fran, for example, there's been 110 holes drilled there, over $20 million spent. I've been involved with that project for over a decade. So again, we have a very good idea of what's there and how to go about extracting it. Mount Vernon, a little earlier phase, but like I said, all the infrastructure is in place, and with a large bulk sample, we'll have a very good idea on the metrics and dilution. Like I said, that's mainly what we're focusing on. Recovery seems to be not an issue. Tabor Mine is another mine in Sierra County. We've joint ventured on that. The guys are up there working. Right now, we have gone 700 feet into the existing tunnel to the wild boar zone where the last extraction occurred in the 90s. We're rehabilitating that area, and it's going well. We're almost at the mining phases, and then we'll immediately sample, and we'll have some numbers on that shortly. Just a brief mention, we do have significant copper deposits as well. Murex is an old Noranda property. Noranda is now Glencore. It's a fairly large copper discovery. It's been drilled historically. We thought it was because there was large sections of low grade 0.2, 0.3, 0.4% copper. The discovery recently by our geologist of high grade copper along the fault, along a stream area, really sets this up for something a little bit different. We thought low grade mass tonnage, but it looks like it may be smaller tonnage with significantly high grade. And that's really what we look for these days in terms of potential production property. That's still a ways away, but it is an advanced exploration property. Copper Island, a smaller property that has approximately a 2 million ton, 2% resource, ballpark about 400 million in situ. It's not a priority for us, but it sits well as a very nice asset within our portfolio. Capital structure, I guess as of the 17th, we're at 6 million. One comment on the stock. When I took over, we were approximately $1 million market cap. I think as of today, we're getting closer to a $10 million market cap. We've had significant movement in our share price. A very large number of shares. This was a legacy thing for when I took over the company. We've not changed the share structure. Our shareholders seem to support having high liquidity and a relatively low share price. At some point, we may restructure, but that would only be at the time that we are uplisting to QX, potentially NASDAQ, and combined with a significant financing. I'm just very conservative about any type of restructuring. So unless there's really a need to do it, we just trade at decimals, but it doesn't really reflect the market cap in terms of being particularly low. Like I said, a sub $10 million market cap as we stand today. I believe there's some room to run here. The projections reflect that, but as CEO, limited on what I can say about open market activity. But I do think that we have some room here in terms of value, and the stock has only really started to move in the last 2 months or so, from like I said, around $1 million market cap to just sub 10 million. Okay, I guess we'll open for questions here. Let me just close this. Okay, first question is, what are your milestones over the next 12 months? 12 months for us, since we're moving so fast, it seems a little ways off. But right now, since we bought the mill, our target has been pouring gold in Q4. That's the major milestones without getting into the details. Obviously, that's combined with mining operations, which have already commenced at Fran and should commence at Mount Vernon shortly here. So the primary milestone is Q4 pouring of gold and revenue. Our target based on those numbers is north of $100,000 a day in revenue. 50 ounces per day is the target, 100 tons at 0.5. If things go better, then great. But that's our primary goal for Q4. Moving into next year, we would look to expand production capacity. We have our eye on a number of acquisitions that would lead us to be able to go from 100 tons per day to an additional 300 tons per day. So our target really over the 12-month period is to be able to expand, maybe even sooner, but with additional permitting and construction, if need be, we'd look to expand to 500 tons per day. So that would be the long-term strategic goal, and you can apply the metrics of a 5x to that, in addition to acquiring additional projects. And then since we have significant copper interests, we may end up putting that in a subsidiary and really have a sister copper company. But right now, with the strength of the gold price, we're really focusing on our gold and production asset. So one question here, are your projects all brownfield? Brownfield's not a word that we would use for our project, so I would say no. The mill was permitted, constructed, designed, financed over about a 10-year period, culminating about 2018, 2019. The previous owner had a major silver discovery. They've focused on that. Through my network of mining contacts in Vancouver, the mill came to me. So the mill is new. There are no tailings or anything like that. Mount Vernon is new. It's never been mined. It has modern infrastructure. Fran, same thing. It's an advanced exploration project now in small production, but it's never been mined. So no, our projects are not brownfield. Capital position, we've continued to rely. So the question is, can you speak to your capital position? We've continued to rely on existing shareholders and finance primarily through debt. We are in discussions for financing. I'd prefer not to speak to the details of that, but our primary goal is to be in production and cash flowing by Q4. So our capital requirements, I wouldn't say are nominal, but we do not expect to enter any major capital raises or cause significant dilution at this level. There's a question here. What is your end goal? I think it's laid out in the strategic plan. We'd like to be a mid-tier gold producer. Right now, we're probably the most significant, just in terms of activity, gold mining company, junior gold mining company in the Western US and Canada. So we'd like to crystallize that into being a mid-tier production company with significant cash flow and really, again, production of ounces of gold and pouring of gold bars as part of our really our ownership plan of having both production of gold and holding on to as much gold as we can. Ownership structure. I own approximately 20% of the company, and a significant prior investment fund owns approximately 20%. And then the third owner would be the mill, the company that sold us the mill. We have paid them part cash, part stock. They have approximately about 15% of the company. Of note, and again, speaking to the strategic goals of the company, we have a call on all of their stock, but in particular, about north of 10% of their holdings. We have a call at, against today's price, about a 60 or 70% discount. So if the mill's making money, we plan to be aggressive and reacquire and cancel that stock. That would represent 10 to 15% of the float right now. How are you funding acquisitions? Somewhat through stock and through cash. Like I said, myself and an existing fund have a pre-existing fund that has large ownership, have continued to fund the cash needs. And then we have issued paper in some cases. Almost all the acquisitions have been set up as joint ventures where we can put money in at our option, and then over a long time period. And then the other ones have been structured against production. So our partners, in terms of ownership of the mines, has been structured. So, for example, we have significant payments on Mount Vernon, but this is structured against production. So if the gold is there, we produce, everything's going well, then they're pretty much first in line to get paid. But I've been in this business a very long time, probably done 100 property deals, have developed multi-billion-dollar exploration projects. So I nobody's perfect, but I believe I've structured the deals in a way that the company's protected and will not get backwards in terms of huge cash commitments that can't be paid for by production or share issuances that are not somewhat under our control. Okay, I think that's it. So if there's nothing further, we're gonna log off here. I thank you very much for your attendance.